Welcome to the Introduction to Trading mini course. In this powerful 4-part video series, you are going to learn the things that you need to actually make money trading. Whether you want to trade Forex, stocks, indices, commodities, cryptocurrencies, whatever it is, this is the information that you need to trade successfully. Hello and welcome to the Pine Street Capital YouTube channel, where we talk all things trading and investing. My name is Ron and I'm the managing partner of Pine Street Capital. I've been trading for over 6 years and I cannot wait to bring you this training. Now, with the quality of information within this video series, it might lead you to question why on earth someone would put such good information out here on YouTube for free, and this is a reason. I'm just sick and tired of these charlatans selling you a lifestyle on Instagram. Overpromising, under-delivering. And it's finally time that the industry got someone who was willing to share, number one, the truth about trading, and number two, that it came from someone who was actually qualified to speak on the topic. And this is it. So who am I and where did I come from? In a nutshell, I studied an economics and finance degree at the University of Cape Town. Then I became the youngest registered derivatives trader in South Africa. That was about 4 years ago, and eventually became a member of the South African Institute of Financial Markets. I had a short stint in asset management and brokerage, and now I am a full-time trader, which I've been doing pretty much since I started Pine Street Capital in 2017. So what is actually included within this training? This training is a 4-part video series that I recorded a few years ago, and I only ever share this with my really inner circle members within my community. But this time I decided, you know what, it's time for this information to go out there. So I cover 4 very important questions that you need to know about trading. And that's number 1, what is trading? Number 2, can you actually make money with trading? Number 3, what's the dark side of the industry? Number 4, how do you actually go about making money from trading? So right now you are about to see part 1, which is what is trading.
Welcome to the Introduction to Trading mini course. You're probably here for one of 2 reasons. The first is that you're interested in trading and want to find out more about it to figure out whether or not it's really for you, so that you can get the right start to trading the financial markets. The second possible reason why you're here is because you've been trading for a while and maybe haven't seen the results that you expected when you started out and want to learn new things that you previously didn't know about trading. If either one of these describes you, then I'll tell you right now, you're in the right place. As for the actual content that we'll cover here, I'm going to address some questions that people usually have about trading. And they're questions that are answered somewhere else online, but what you'll find is a lot of the answers to these questions are very badly informed opinions. So the questions we're going to answer today are, what is trading? Can I actually make money from trading? How do I protect myself from the bad guys in the industry? Because this is an industry that's riddled with a lot of scams. The last question we're going to answer is how you actually make money from trading. Now, without further ado, let's get into it. The learning outcomes from this video are for you to know what trading is, to know a brief history about trading, specifically the last couple of decades and how the industry has evolved. The last one is so that you know what the statistics of successful people actually are, to bring you to a position whereby you can make a more informed decision. So the first question is, what is trading? Trading is simply the act of buying, selling, or exchanging goods and services. The whole idea behind it is to buy low and sell high, thereby pocketing the difference. And later on, we'll get into how you can make money when prices are going down, by essentially selling low and buying high, so that you can profit from the difference as well. Now, why do we trade? And the simple answer is so that we can make money. This is a money-making opportunity. Now, for us, what we're specifically talking about in terms of trading is trading financial instruments. And these include things like stocks, Forex, commodities, indices, cryptocurrencies, options, futures, maybe even structured products. Well, in short, there are a lot of instruments that you can trade. And I guess the most popular are stocks and Forex. That's what everyone knows about. That's what's being marketed on social media a lot. And when you look at the industry as a whole, you'd expect that there's a lot of growth in the interest in trading. You look back at, say, 2012 to about, say, 2014, you didn't see as many posts of Forex traders and stuff like that as you do today. But what I found when I went on Google Trends was very interesting. And it was this graph. What this graph shows is the overall interest in trading worldwide since 2004 has been decreasing over time. And I really started to ask myself, why is that? Then I drilled down into the instruments that people actually trade, and I stated the most popular ones earlier on, and they are stocks and Forex. So I looked at the interest in stock trading, and that's what I found. The interest in stock trading has been declining along with the interest in trading overall globally since 2004. And this was pretty strange to me, since you see a lot of the marketing within this space indicating to you that the industry is growing. But when you actually look at the data, you see that the industry is shrinking. So I dived deeper into it and went into another asset class, which was Forex. And that's the graph I found. Completely different from the graph that you find for stocks and trading overall. The Forex trading interest has been growing, and it's at an all-time high right now. It's within the 100th percentile as we speak. And I really started to ask myself, okay, what countries are actually driving this growth in the interest in the Forex industry? And the top 5 countries are Lesotho, Botswana, Namibia, South Africa, and Zimbabwe. If you want to go into more detail, the top 10 then include Nigeria, Brunei, I don't even know where that is, Kenya, Ghana, and Uganda. The moment I saw this, it became clear to me what was going on here. What do all these countries have in common? Well, besides the fact that most of them are African. You might actually ask that question with a different spin to it and say, what do a lot of African countries have in common? If you haven't already guessed it, it's widespread poverty and a high unemployment rate. Now just think about it. If you tell someone in these countries that you can make money from your mobile phone or your laptop, and that you don't need to work in order to make a living, what do you think is going to happen? Of course, they're going to seize the opportunity, and they're more likely than the average person in a developing country to go for it, seeing as they have no other option. Now, let's take it a step back and try to get to the answer to the question, why Forex? And it has a pretty long answer to it. But basically, pre-2004, trading was heavily promoted as something that you could make money with very quickly and very easily. And they mainly marketed this idea to developing countries. This led to a lot of people being interested in all kinds of trading. Forex, stocks, commodities, you name it. Back then, brokers were promoting stock trading very heavily because the big profits were in the US, where there were a lot of people with a lot of money to start trading with and had an interest because of the fact that they were familiar with the New York Stock Exchange. Forex was also heavily promoted, but not to the same extent that stocks were. After a few years, a lot of people lost a lot of money, and they realized that it wasn't as easy as people were making it out to be. So the interest started declining, hence the downward trend in the graph. Eventually, the US market and more developed markets lost interest in stocks, and it also became more difficult to do business in these markets because more regulation came in as a result of the extremely unethical marketing. Trading volumes eventually started to dry up, with less leverage being able to be offered to clients. This drove them away and led to brokers making the move to less developed countries, with the same narrative of trading being an easy way of making a lot of money very quickly. So post-2004, they expanded to the new market. Once they got there, they discovered that it was a lot easier to do business because of the poverty and unemployment. But they faced one major problem, though. It was the fact that the stock market was less accessible and less people were familiar with it. I mean, at that time, there was no stock market that came even close to the level of development that the New York Stock Exchange had. For most of them, it's still the same today, with the only real exception being South Africa, which is almost on par with the developed country stock markets. So anyway, the brokers had to promote a different product that would be appealing to this market, and it was, you guessed it, the Forex market. This is because of the fact that it's the largest market in the world, and it could easily be simplified for beginners to learn. But is this actually the case? You can be the judge of that once we get to a later stage in the educational material. So trading is really still in its infancy in Africa. And just like the case with developed countries before 2004, people are still at a stage whereby they don't realize just how difficult it is to make money trading. It just so happens that Forex was the easiest product to market to the public. Speaking of marketing, Let's get back to the question that we were trying to answer, which is why Forex, now that you've got the background. The simple answer is that it's what's sexy. What most people don't realize is that making money trading Forex is harder than most of the other asset classes because of the sheer volume of competition. This doesn't mean that it's impossible, though. The truth is, when someone says that they want to make money trading Forex, they don't really mean they want to make money trading Forex. They mean that they want to make money trading. It doesn't really matter to them what they trade as long as they can do it profitably and sustainably. I mean, assuming that most people are rational, which may or may not be the case, but if you are rational, you would trade the most profitable instrument, not just trade Forex because you just want to trade Forex. I mean, some people might because of the fact that a lot of these marketers put these kinds of images in our heads. This one says, life at 23, you see the McLaren there. You see another guy over there with an Audi, what is that, a Louis Vuitton bag, and private jets, luxury cars. That's the kind of life that's promoted at the end of the day. But when you really drill down into it, it really isn't the reality for most people. For most people, they end up in this kind of situation. They're depressed in front of a computer screen. Some people even smash their computer screens. I'm not saying I haven't done this before, but hey, this is just what people need to realize. Trading is not easy. It's difficult. It's stressful. Increased marketing budgets within the industry, particularly on digital platforms and sports sponsorships, have caused a rise in the number of people interested in trading. But none of these have even come close to the impact that social media influencers have had. I mean, I'm pretty sure that once or twice you've come across a post by a so-called Forex trader on Instagram or Facebook driving a Lamborghini, getting into a private jet, or sitting next to a pile of cash with a chart on a laptop screen with the claim that they made a couple $1,000s within a very short space of time. I probably see at least 50 of these posts on a daily basis. And the unfortunate thing is, it's just not true. But so many people have fallen prey to these false claims, and it's given rise to some, I'd say, very questionable individuals. Oops. How did that get in there? Let's talk about the real statistics behind trading. What percentage of retail traders actually make money trading? What do you think it is? If you've been in the industry for a while, well, not even a while, I mean, a few months is actually enough. There's what we call the 90-90-90 statistic. It's basically a widely quoted statistic within the industry about how 90% of retail traders, that's people who don't do this professionally, lose 90% of their money within 90 days. Think about that for a second, because it's one of the most misunderstood statistics as well. Because, I mean, people assume that if 90% of retail traders lose 90% of their money in 90 days, that should mean that 10% of retail traders make money, right? And when you really look at the statement that's on the slide right now, it says 90% of them lose 90% of their money in 90 days. How about after 180 days? After 180 days, what you'll probably find is even more of them lose money. And after a year, what percentage of retail traders would you think have lost money by then? There was a study carried out on day traders in Brazil, and the findings were published in 2019. It revealed that out of 19,646 traders that opened an account, only 47 of them had actually made money within a year's time. And that really gets you to the actual numbers within this industry. Only 0.24% of retail traders actually make money. Meaning that if you're sitting in a room right now with, say, 400 traders, only one of you is actually going to make money. And we're not even considering how much money that is. It's one person making above $0. Now, with the statistics of successful traders being so low, why would you even try it? Can you actually make money trading? We're going to answer that question in the next video.